morning and happy December 7th for you. Getting close to Christmas, and believe it or not, we are actually writing loans with February 1st payments. So this week was a great week for rates. We had quite a bit of volatility, obviously, in the stock market. Stock market is down 400 more points today. And then we also had quite a bit of comments out of the Federal Reserve trying to cool off the stock market and try to maybe pump up a cooling economy. But let's take a look at where rates went this week. You can see that we're starting here on the 3rd. We have 4 days of rates this week, and because rates took the time off for George Bush's funeral on Wednesday. But the stock market went down almost 3% this week, if not 4% by now. So that means people park their money in bonds. And then Monday, we also had the Federal Reserve kind of talk about, hey, we are maybe going to pause rates over the next year. And then today, which is this nice little jump right here, they actually came out and said, you know, we may not even raise rates in December. We may raise rates in January. So they really are kind of backpedaling a little bit on rates. You can see last week I indicated that this was the 4.75 mark, and we definitely blew through that mark. We are above what's called a Fibonacci level. I'm not going to go into that, but this is our 100-day moving average, and we're coming up to our 200-day moving average. So we're going to get a little bit of a squeeze in here because 200 days is a pretty solid mark to bust through. But if we bust through that 200-day moving average, we're at the 4.625, 4.5 range. So we are still in a floating mode, and you can see we've been in a floating mode since we bottomed out right here about 5 1/8, which is a tough nut to bust. A couple other things that came out this week was the jobs number. That was the big one we were expecting this week. Only 155,000 jobs were created last month, and the previous month was downgraded by 12,000. But the unemployment rate stayed at 3.7%. The commentary behind this is there are nobody out there to get jobs. So this number is probably going to continue to go down as there's not anybody that is out there to take jobs. There are people that continually take unemployment or just don't want jobs. So we're going to really watch this unemployment rate. If this number continues to slide and the unemployment number starts to go up, that's where we're going to be a little bit of concern. What was really of concern was that we thought was the average hourly earning. Last month it was 3.5, and this month it's only at 2.7. What this means is people are making a little bit less money, but the talking heads really believe that they're making less money because they're putting in less hours. Employers are starting to pull back hours and pull back overtime, which is causing earnings to go down. So we're going to watch this number along with unemployment numbers, and we're going to really focus in on busting up this 200-day moving average and going to this next Fibonacci level. And like I said, we're definitely in the 4.75 range for conventional financing for good credit scores. And this could be about a 4.625, at least somewhere in here is the 4.625. So we are definitely going to be floating rates at this point in time. Of course, it's always the gamble. You know, all of a sudden Trump could say tariffs are all off and China's great again, and we will go this way pretty darn fast. So hopefully this helps you guys out and allows you to get some information to your borrowers. This week we've also had underwriting guidelines change. Fannie Mae is changing guidelines and jumbo guidelines are changing. We'll start with the bad news first, which is the Fannie Mae guidelines. Fannie Mae, as of Saturday night, is going to update their underwriting. And prior to this, we could go up to a 49% debt-to-income ratio, really without any problems. Come Saturday, that is going to be lowered down to a 45% debt-to-income ratio. We can still go above the 45% DTI, but it is going to require minimum 6 months of reserves for the mortgage payment. And in some cases, it could require 9 or even 12 months worth of reserve. So for all of our clients, we've actually already run the Fannie Mae files, and we have a case number prior to the change, which means they're good for 90 days. If you have clients that have not have a Fannie Mae case number, they will probably need to be rerun and reevaluated come Monday to see if they still qualify for those people who have been sitting on the fence post. On the good news, we actually have jumbos that are being very competitive. So a jumbo loan is any loan amount over $484,000. That loan amount just changed last week. We covered it in last week's video. So if you have a loan amount over 484, you need to go with a jumbo or a high balance loan. Typically, believe it or not, the banks have been very competitive in the jumbo loan, but who wants a $1.5 million jumbo loan? Pretty much everybody. So they were really competitive, but now our wholesalers are getting even more competitive with the jumbo loans. And what we're seeing is one of our competitors brought out what's called the Jumbo Bank Buster. This is allowing us to do 80% loan to value with a minimum 700 FICO score and up to 1.5 million. The rates on this are actually pretty spectacular. I did a comparison of the rates with both retail lenders and online lenders, and they were spectacular. So if you do get a chance to get onto a jumbo loan, let's shop it around and find out who has the best rates. Give First Choice Mortgage a call today and let us show you how easy, simple, fast, and professional mortgage lending can be.